January 26th, stock playbook. Okay, what are we doing? The Dow Jones was down 22 points, 0.1%. Nasdaq Composite 13 points, 0.5%. S&P 500 also down 0.5%, 7 points. Markets come a long way. It's due for a pullback. How much of a pullback? Nobody knows. At the very least, maybe the 20-day moving average, the 1300 level. If we fail at 1306, which was yesterday's level, 1307, if we fail there at that level, Tuesday's level, if we take out this 1306 level, I think that's when you'll see the selling accelerate, fall through 1300. We'll see if we catch a bid down here at 1290 and change. But we're due for a little pullback. This is what we were talking about the other day. We didn't want to say we get cute. With that being said, listen, I do a lot of videos. There's 4 videos tonight. I got to do one after the other. Things happen while I'm doing videos. So, listen to those other videos. There's stuff in there. In our focus list video tonight, we talk about Fusion IO, which I know a lot of you have had with the earnings play. Today's low didn't undercut yesterday's low. The volume was lighter, so we like Fusion IO. I mean, until I see an increase in volume and cutting out yesterday's low, which was around the 24.20 level, I'm not saying I'm excited. I am nervous that we're going to cut it, tomorrow or the next day, but I'm still staying with Fusion IO. I expressed my concern with GNC, which again, listen to the focus list video. I don't know what happened, just some profit taken. Heckman, HEK, one of the stocks under 10, sold off. We had a little bit right at the close today, but I'm nervous about that. I'm going to focus on the $5 level. But to give you an example how things change, I did the focus list video. I was done. It's booked. It's in the in the process of getting loaded on the server. But since then, Transocean, RIG, which had an uneventful day, so there's no reason to talk about. At 5 o'clock this evening, Transocean pops. Now it's around $51 a share on strength being attributed to the Wall Street Journal, which is reporting that a judge has said the company is going to be indemnified for most of their Deepwater Horizon spill claims. We talked about that back here when we were looking at it, at $38, $40 a share. We said we thought the damage was done. We thought this stock could go ahead and have a nice run. And if they got the news that they weren't going to be responsible for the damages in the Gulf of Mexico, that the thing could pop. Tomorrow's that pop. What to do? Finally, you're going to actually hear what I would do before instead of after the fact. Rig, if you believe the market's just beginning a bull market, hold on to Rig. It might go to 51, 52, 53 tomorrow and then pull back to 47 or 48. But ultimately, I think Rig goes much, much higher. How high? From an investment standpoint, I think you could see 65, 70, maybe even $80 a share if you're patient and we have a bull market. But I don't know if that's the case. So I'm going to trim a little bit. I'll sell a little bit. I'll take a small sliver of the profits that I make on RIG, and I'll buy some upside calls going out to maybe, August or April, May, somewhere in that area. Haven't looked at them yet. I'll share it when I do it. But RIG looks good, continues to look good. It has looked good for some time. In the earnings playbook videos, Arcos Dorados, another one we didn't talk about in our focus list. We did mention it in the earnings playbook video. And what we said in the earnings playbook video is that the company's earnings weren't confirmed to be today. They were shooting for today, but they weren't confirmed by the company. Now they moved them to like March, so it's not on the earnings calendar anymore. If you go listen to the earnings playbook video tonight, I go through how you could tell if a stock is confirmed. There's a little check mark in a box to the left of the earnings plays, but this is stuff that you wouldn't know if you didn't listen to all the videos. So I'm tapping on it now. We're not going to go into them all because we have an earnings playbook video tonight. But Parametric, just killed it. Arctic Cat, ACAT, another one that just blew up today, had a great day. These are some of the earnings plays that we've flagged that are actually working. It's good to see a couple of working because God knows we've had a bunch that aren't working. Delphi wasn't confirmed, got pushed off. I'm sorry, these charts are loading really slow today. Delphi Automotive, they weren't confirmed, then they finally confirmed last minute. They came after the close. So Delphi killed it. They beat by 35 cents, so we'll see how they treat that tomorrow. A couple that are on our radar, which we discussed in the earnings playbook video. BJ's Restaurant. Again, I'm sorry, I'm not this bad typing. It's just my computer's jacked up. BJ's coming in 2 weeks. I don't think it's confirmed. Bacon Roofing, whichever one you want to say, potato. Also earnings coming in 2 weeks. I'd like to see a pullback. But that's in the earnings playbook. In the new high video, we talk about Micro Mighty. Oh, man, this video. I apologize. Yeah, it's just not loading. I'm so sorry, guys. My time, your time, very valuable. The internet just can't go as quick. Micromet, MITI. This is a stock we talked about often as a stock under 10. It's one of those biotechs that we said wasn't earning money, wasn't going to earn any money anytime soon, but could be bought out on any day as the industry continues to consolidate. That's what happened today. Nice 30+% move to the upside. Magic Jack, CALL. Oh, sorry, guys. Magic Jack, CALL, continuing its move up. We talk about stocks like that in our new highs video. Other names that deserve us talking about, TCBI, Texas Capital Bank Shares. We were very clear. This is when you wanted to buy it. It broke out. It was on our radar, pulled back, 50-day moving average. If you bought it there, you continue to enjoy the ride. If you bought this for an earnings play, it doesn't look like it was a winner. But you shouldn't have lost money either. But I never did it because it didn't pull back. But TCBI, if it comes in towards the 50-day, will give you another opportunity to get long. The reason I mention that is because the other day, Signature Bank, which did give you an opportunity to get in, if you wanted to, ended up selling or never did. I'm sorry, never did give you an opportunity to get in, but some people I know bought it. I like on the dip, when it found, because they killed it. They had a great earnings report. I thought this was a great opportunity to buy it after the earnings if you weren't in already, and then play for a bounce or a trade. We didn't get that bounce today. We undercut the low from the earnings, move lower. So now you're out and you move on. Invensense, INVN. We'll have to wait to see how it trades tomorrow. Doesn't look like anything great either way, but it did come back and give us an opportunity to get long. I bought the 12.5 call options. Google, GOOG. We took a shot at it when it dropped, catching the falling knife, which usually doesn't work out. When it undercut that gap downs low, we said to get out. That was 2 days ago. Now it's still selling off, but now it's coming up on its 200-day moving average, which also coincides nicely with the low back here of 561. So now you got your line in the sand. I think Google at 560, you use 560 level as your stop. You get long here at this level. 10 points in a $500 stock, you're talking about nothing, okay? You're talking about less than 2%. 8 points really is what you're talking about. So I think Google, for those of you who are looking for an investment, you start nibbling on Google. You can get long right here. Google will more than likely be added to our focus list as a large cap stock. I like Google. It's undervalued. It's a great company longer term. They met with some profit taking. They didn't have the greatest earnings report, but now I think you can look at it from an investment standpoint. Now, some people are going to say, well, why the hell did you sell it 2 days ago? 2 days ago, I bought it as a trading opportunity off of the earnings miss. There's a difference. I'm talking to everybody out there. Some people trade, some people invest. I didn't like it as an investment the other day. It was a trading opportunity that didn't work out. We lost hardly any money. Now, I'm starting to look at it as an investment down here, and I'll use the 560 level as my stop loss level. I hope that clears it up. CRR. This is Carbo Ceramics. We've talked about this stock in the past. Ceramic propane used for hydraulic fracturing, natural gas and oil wells. Abomination of a quarter. Did not go well. Heavy volume sell-off. Closed at the lower end of the range. This stock's going to go lower still. But now I'm looking at this $90 level as the line in the sand from a trading standpoint. And 104 is still too much money. I'm not going to pay 104. But tomorrow, if I get this thing selling off down to, let's call it 92, 95, somewhere in there, I'll get a level and then I'll use 90. A close below 90, I'll eject from a trading standpoint. From an investment standpoint, I love this company longer term, but I want to see it build the base or come. It's below its 50 and 200, so there's no way of knowing where it's going to find that support. Right now, 90 would make a logical would be the logical explanation. But if we undercut this low right here, which is that 90 I'm referring to, there's no telling how far this stock could go. So more than likely 75, 77. I don't think it's going to get there, but I'm just painting a picture how you use different levels for different, risk parameters or investment ideas, whether you're looking to trade or invest. Under Armour. I got 2 emails from people today saying, Under Armour sold off, you suck again. Guys, oh my God, why are we chasing these things? The time to buy Under Armour was when it was sitting right here. Under Armour, yes, it didn't have the greatest report. Yes, it's not a winner as an earnings play, but nobody should have got beaten up in this because you should have already been up if you chose to play Under Armour into their earnings. Come on, we have to get a game plan. If you want to change your game plan from mine, that's fine. But you can't blame me for losing money in Under Armour because it shouldn't have happened. Broad Vision, one more day closer to getting long. I didn't pull the trigger today. God knows I thought about it on 2 or 3 occasions. We nailed it to the up. We nailed it to the short side. I said cover your shorts, and I said the 22 area is where I would start entertaining. It dropped to 21.64, but it closed at the low end yesterday. I wanted to see how it closed today. It closed at the low end again today, so I bought yet another day. Maybe I'll get an opportunity to get in there at 20. And then what will I use? I'll use this gap up high of 1901. That will be my stop loss level to try to play this thing for yet a bounce. So in at 20, maybe 21, a move below 19, and we're out. But I think there's a bounce, a tradable bounce. What am I looking for the upside? If I'm risking 1 to 2 to the downside, I want to see 3 to 6 to the upside, depending on what my downside. I want to make 3 to 4 times what I'm risking to the downside to the upside. Otherwise, it's not a trade that I'm looking to make. I hope that helps people understand what I'm looking to do. Clearfield, CLFD. CLFD sold off today, lost the 50 and 200 day. This thing's volatile. I still like this company longer term, but this happens when you're playing these small stocks, and they come out with revenues and earnings that, don't meet or their guidance is lower. But Clearfield, it's a name we continue to like. We'll stay tuned on that. CJES, C&J Energy Services. I was hoping it would hold that 18 and change. Today it didn't on heavy volume. I trimmed. I did not sell everything. I sold half of my CJES position, but this is probably not the right play, but I'm sharing with you what I'm doing in the hedge fund. Just so you know, I replaced the stock that I sold with June 20 call options that I bought for $1. Okay? I bought them for $1. I'm just done losing money with, I had a substantial amount in this. I like this play. Now I have the options. The most I can lose from here is $1, and I feel a little more comfortable that I could still participate in the upside. I still like the company. Again, sharing with you what I'm doing. SNCR, Synchronos is a name we've talked about. It had a nice pop moving out. Looks like it's ready to get above that 34 level. Heavy volume. Stamps.com is on the radar. They have earnings coming in the next couple of weeks. Keep an eye on that on a pullback. That's one you can look at. PKT. So every once in a while, these names that we used to talk about often or more often and haven't mentioned lately because they weren't in buy. Listen, we talked about PKT here. It broke out, had a phenomenal run. There was money made there if you were a trader. If you're an investor, you waited. You got your pullback. Today, now PKT, why today? Because of the volume. Heavy volume, double their average daily volume as the stock recaptures the 50-day moving average. We had a pullback. We wait for it to prove itself. It did that. We had a little bounce here on okay volume. Ran into resistance at the 50-day and pulled back. What a great opportunity to get long on this pullback and then use the recent low as your stop level. Obviously now we're a day late as far as the perfect entry level, but it still should be on your radar because this is a name I like going forward. Computer networking. Juniper, ugly, selling off big in the aftermarket. I think PKT could see some selling tomorrow also. If it comes in towards the 15, PKT is one you could take a look at. Mistress Group, MG, another one of those names that we've liked for some time since it was a nothing, mid-teens. Had a beautiful run, had a great earnings and revenue number, but pulled back. Now starting to show us something. MG, a couple of above-average volume days, broke out of this tight range it's been in for the last week, MG, Athena Health, ATHN, got above the 58.5 level. That could see more momentum. So there's ideas out there. You're looking for shorts. If you think the market's ready, it's nice to combine it with a put option, and an earnings catalyst, which could go ahead and lead to, huge gaps down. We got 3 of them next week: Baidu, Amazon, and Groupon. Sorry. Baidu, Amazon, and Groupon. Amazon's got a nice lift. As we lift towards recent resistance, that's when you want to go ahead and short. You use the 200-day moving average. So Amazon is one I like as a short into their earnings. Now, these downside earnings plays, Apple, Netflix, Intuitive Surgical, or Google, they haven't been panning out very well. So, needless to say, it's not working. But Groupon is another one to the downside. As far as Apple and Netflix are concerned, people are asking me, what am I doing? I still think that if the market goes lower, they both go lower. That ain't rocket science. 75-80% of stocks follow the trend of the market. But I like Netflix as a short on this gap up, as I do Apple. Apple did not trade as good today as you would have thought after yesterday's gap move. You can expect some profit taking, but I think Apple sees the 420 area before it sees 460. Is that something you can make money on? It depends on your risk tolerance. 460 is 16 points away. 410 is 34 points away. It's not really a great setup from here, but if you pick the right option strategy, I think you can make some money. Lululemon, another name that we've talked about often, as a short candidate, recently broke out. That's one you can keep on your radar. There's no volume behind the breakout. You get a stock that gaps and goes like this, you'd like to see some continuation. We don't see that. I think Lululemon could be a good short candidate. First Solar, along with Best Buy, and throw in Tesla. 3 stocks that I think you could short them just about any lift, and eventually you'll make money. That doesn't mean you throw caution to the wind, but let's throw Tesla up there. 3 companies that longer term I think go much lower. Sorry for the charts loading so slow. Tesla hasn't even come up yet. That's it for the playbook. Tesla bouncing up against the 50-day moving average. The recent high was 29.50. What a great opportunity to get short Tesla. A close above 30 is a nice tight stop. You're risking $1 and change. A close above 30 you cover. If you're right and we're right and this pulls back, you make some money. I still think Tesla goes much lower. Single digits, under 10. Can't be any clearer than that. Have a good night. I will talk with you tomorrow.